Have you ever looked at your grocery bill and just wondered how it got so expensive? Or seen a headline about a trade war and thought, what does that even have to do with me? Well, today we're going to pull back the curtain on that. We're talking about tariffs and, more importantly, how you can build a financial shield to protect your wallet from all the chaos.
So let's just cut to the chase, right? When you hear politicians and news anchors talking about trade wars and tariffs, what's the real story for your personal budget, for your small business's bottom line? Because trust me, this isn't just about politics, it's about your money.
All right, so first things first, what is a tariff? The simplest way to think about it is just a tax. It's a tax that a government slaps on stuff that's being imported from another country. And they do it for a few reasons, sometimes to give their own local companies a fighting chance, sometimes to make some extra cash for the government, and yeah, sometimes it's a way of getting back at another country during a trade dispute. But here's the crucial part. These policies don't just stay in Washington, D.C. or some other capital. They create a financial shockwave, a ripple effect that travels through the entire economy. And eventually, that wave crashes right into businesses and, you guessed it, consumers. Let's look at some real numbers to see what that actually looks like. Okay, check this out. During the recent U.S.-China trade war, the tariffs imposed by the U.S. ended up costing American businesses an extra $46 billion a year. That is a massive number. And where do you think a lot of that cost ends up going? Yep, it gets passed right down the line, baked into the prices we all pay. And remember, these things are almost always a two-way street. In retaliation, China hit U.S. soybeans with a whopping 25% tariff. For American farmers, this was absolutely devastating. I mean, one of their biggest markets just, poof, vanished almost overnight. We're talking an estimated $12 billion in losses right there.
And it's not just groceries and farm goods, it's the big stuff too. Tariffs on imported steel and aluminum directly increase the cost of building a car. One study estimated this could add around $1,200 to the price of a brand new car for the average person. Ouch.
Okay, I know, those numbers can feel a little overwhelming, but this is the point in our story where we pivot from the problem to the solution. And the solution, the real key here, is proactive planning. It's not about trying to predict the future or outsmart global politics. It's about building financial resilience, making your budget tough enough to withstand these kinds of economic hits.
So let's start with the business world. If you're running a company, you are on the front lines of this stuff. You feel that volatility immediately. The good news is, there are some really powerful, smart strategies you can use to protect your bottom line.
For any business, job number one is to look at your supply chain. You've got to know where your stuff comes from. The first step is a full audit. Figure out which of your suppliers are in countries getting hit with tariffs. From there, you can start building relationships with suppliers in other places, maybe countries with friendly trade deals. Or, even better, you can look for ways to source things closer to home, which really cuts down your risk.
And you don't have to look far to see this strategy in action. I mean, look at Apple. When they started getting hammered by tariffs on goods coming out of China, they didn't just sit there and take it. They made a huge strategic push to expand manufacturing into places like India and Vietnam. It was a classic diversification move to make sure they weren't too dependent on any single country.
And beyond just moving factories around, smart companies play defense with their finances. They run the numbers. They literally model what a 10%, 20, or even 50% tariff would do to their business. They also get really good at understanding the rules of the game, taking full advantage of free trade agreements, which are basically special deals between countries. And they apply for every single tariff exemption they can get.
Okay, so we've covered what businesses can do. That's great for them. But what about the rest of us? How do we take that same idea of resilience and apply it to our own household budgets? How do we shield ourselves from these rising prices? Let's get into it.
This is all about becoming a more strategic shopper. Seriously, every time you buy something, it's a choice. So instead of grabbing that brand new imported phone, maybe a refurbished one would work just as well for way less. Or before buying that shirt from a foreign brand, is there a cool local company making something similar? Even small shifts, like choosing the store brand over that fancy imported cheese, they seem minor, but they add up to create a real buffer in your budget. So here's your personal finance toolkit, boiled down into 3 key moves. First, be a price detective. Pay attention to how much the things you buy all the time actually cost, so you can spot those price creeps early. Second, build that financial cushion, a little contingency fund. Even just 5 or 10% of what you make each month can be a lifesaver when prices suddenly jump. And third, Think about this when you invest. Maybe diversify into sectors that are a bit more insulated from all this global trade drama. Like healthcare or utilities.
When you boil it all down, all of these strategies, whether they're for a giant corporation or for your own family, they're about something bigger than just tactics. They're about shifting your entire mindset. It's about moving from just reacting to financial news to being truly proactively resilient.
So how do you actually live that resilience? It really comes down to 3 habits. First, just stay in the loop. You don't have to be an expert, but keeping a casual eye on trade news means you won't be caught off guard. Second, always plan for a little chaos. That means keeping some cash reserves handy for those just-in-case moments. And third, collaborate. For a business, that means joining an industry group. For us as consumers, it can be as simple as consciously choosing to support businesses that are making these smart, resilient choices. So I'll just leave you with this one final thought to chew on. In an economy that is, let's face it, pretty uncertain, you have to ask yourself, is your financial plan, is your budget built to bend, or is it built to break? The amazing thing is, the power to make that choice is completely in your hands. Thanks so much for joining me.